Palantir, let's discuss that. You've seen some moves there. It's certainly been a volatile name, and one people have been picking, but I think you're feeling and seeing some, seeing some bearish activity.
No, there's some bullish activity in here. Yeah, there's some bullish activity in here also, Nicole. I mean, the stock's up, nearly 50% so far this year, up 17% just in June alone. And then over the last couple of days, a couple of announcements that they had as far as new customer additions. They're extending contracts. Palantir, they announced a partnership with Starlab Space, the U.S. global joint venture across space, Airbus, Mitsubishi, among others, as a strategic partner. Now, this is going to be a multi-year partnership there. And then they were awarded a $19 million contract from Advanced Research Projects Agency for Health to help them underpin business operations, enable continuous improvement using their AI models. Now, this company's long served the needs of U.S. defense intelligence community, but they've expanded more into the commercial and public sector, data management, analytics platforms. So this has been one of those hot names that the AI trade's taken hold of also. And we saw some more bullish activity in here today. Stock was up over 2% at one point earlier on in the session, now down on the day, but still having a pretty good year. But we did see some unusual option activity out in the July monthly cycle, so about 29 days to expiration. Traders bought over 7,000 of the July 27 strike calls, average debit of about $1.05, so that break even of $28.05 over the next month. That's about 11% above the current share price in there, with call volume about double normal daily average volume that we've seen over the last week of trading. And we've seen a lot of volume in Palantir over the last couple of weeks here in June as the stock's risen almost 18%.
Recently, it was revealed that Palantir is taking its expertise in data analytics and AI expertise to outer space after forming a strategic partnership with a company called Starlab Space. In today's video, we're going to take a look at this deal and talk about whether it could help send the stock to the moon and beyond. Additionally, we'll talk about Argus Research's recent note on Palantir Stock and why the Wall Street firm remains bullish on the stock despite its controversial valuation, which even led one analyst to say that it has a gluttonous valuation. We'll explore both opinions so you can decide for yourself if Palantir stock is worth betting on. But before we get into today's video, if you want to keep up with Palantir's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to the video.
Let's get to Palantir. It's trading at $23.88 this morning. Some of your thoughts there, Kenny.
So Palantir is also trading at $23.88. It's up another 28 cents here today. It's in the right space, right? The application software AI space. There's been a lot of chatter around Palantir this year, right? It's been stuck, if you look at it for the last 5 months, really in this kind of $19-25 range as you go across. It's been kind of hovering all around the trend lines, just on the south side, just on the north side. We're back to the north side of all three trend lines now. And, as they develop in this AI space, it's structured products, it's relational, it's geospatial, it's all this stuff that we're talking about. I think that's going to continue to fuel this, right? The market, now if the market backs off, which, it very well may, it's also in the growth space that is probably going to get hit, right? Tech will probably get hit because it has outperformed. But I think you're going to see the downside risk here is look at the chart. Well, Ben will show you, probably in the $20, $21-ish range. Again, the firm owns it in one of our portfolios. I do not, but the firm does.
Yeah, and Argus today put a buy rating. I'm not sure if that's a new rating. Maybe they just reiterated it, but they have a $29 target, so they do like this one. Ben, some of your thoughts on the charts, please. They're all following me with this call.
Palantir is apparently looking to conquer space as it struck a deal with Starlab to become its exclusive supplier of enterprise-wide software data management solutions for its commercial space station. Now, if you don't know Starlab, you'd be able to tell that it's legit by taking a look at the big names backing it. In fact, Starlab is a joint venture between Voyager Space, Airbus, Mitsubishi, and MDA Space. This company is working to build and operate a commercial space station with the goal of maintaining a human presence in low Earth orbit and transition research and science from the International Space Station, operated by 5 separate government space agencies, to commercial space stations. Starlab's space station is expected to get into orbit in 2028, just ahead of when the International Space Station is set to be decommissioned in 2030. The joint venture said that Palantir's technology will help identify potential issues and predict maintenance, prolonging the life of critical components. It also said that they will use Palantir's data modeling through digital twins and AI technologies to enhance Starlab's operations throughout the enterprise. Investors should keep in mind that this isn't Palantir's first contract involving outer space. In fact, since 2021, the company has been working with the U.S. Space Force, a branch of the U.S. Armed Forces, by providing cloud and analytics services for the Warp Core project, and last year, the company extended 3 contracts with the Space Force and the U.S. Air Force worth a combined $110 million. Now, we don't know the terms of Palantir's deal with Starlab, as the terms of this partnership were not disclosed. Still, this partnership is yet another example of how the company's technology is being selected when advanced mission-critical solutions are needed. But what does this mean for Palantir stock and investors? Let's find out. Hello everyone, and welcome back to Investocracy.
Joining us here at Post 9 today is Dan Ives, Wedbush Securities Managing Director of Equity Research, has an outperform on Microsoft and just raised his target from 500 to 550. So the Goliaths, they win, yeah?
It's just, in my opinion, the AI party, it's 9 p.m. in the party. I think goes to 4 a.m. Because as everything we're seeing from a software and demand perspective, the use cases, now it's all starting to play out. And what I can tell you from all of our checks on Microsoft partners and customers, they're lining up. And that's bullish for Microsoft. It's bullish for second derivatives, ServiceNow, Palantir, and others. And of course, led by Godfather of AI, Jensen, NVIDIA. And Carl, in my opinion, it just speaks to our bullishness. Well, I think this tech bull market continues well in 2025.
Where do you think the biggest threat then is? Is it from regulation or something else?
Look, the biggest threat is the China. Because when you think about the U.S.-China, cold tech war, that maybe longer term is the biggest threat. But for right now, someone spends a lot of time in Asia. I view it as a contained threat. And I think it started off as semis and obviously led by Jensen and NVIDIA. But now what's starting to happen is the demand and the use cases, the multiplier. We think for every dollar spent on an NVIDIA GPU, the new oil or gold, there's a $4 to $5 multiplier across tech, which is why I believe this fourth industrial revolution, this 1995 moment, is now playing out, but not a 1999 moment. I think it'll last for another 2 to 3 years.
The AI rally is far from over, and this will greatly benefit Palantir. Not only that, but the company's new deal is another example of its inroads into the commercial sector, which has seen strong growth recently. In fact, this segment had 27% revenue growth in Q1 to $299 million, with U.S. commercial growth of 40% to $150 million. This is because Palantir is seeing more types of industries adopt its analytical and AIP solutions. This is evidenced by the 69% growth in U.S. commercial customers it saw in the quarter. To help draw in commercial customers, the company puts together boot camps to quickly teach them the skills they need to employ AIP and solve their own complex issues. But even though the company's commercial business is booming, we can't say the same for its government business. Palantir's government revenue growth has slowed, particularly with the U.S. government. In fact, government revenue grew 16% in Q1 to $335 million, with U.S. government growth of 12% to $257 million. That growth isn't bad, but for a company valued at a forward price-to-sales multiple of 21 times, overall revenue growth of 21% might not be enough for some to justify that valuation. This is why Meanness, Crispy, Hart & Co. analyst Brian White downgraded Palantir to sell from neutral and issued a $20 price target. Let's take a look at his call and talk about why Argus analysts actually disagree. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Vernita Young rejoins us to talk Palantir. Shares being hit right now, down 5%. What's behind this, Vernita?
Well, it got a downgrade from an analyst whose main message really is that this stock may get a little bit too hot and start to come down a little bit. That's the word from this analyst. He says that the software industry in general, it's been going through this horrible carnage, right? But Palantir has been one of the outliers. Its strength this year and last year, this analyst says, gives rise to a gluttonous valuation because it's been up roughly around 300% since the start of 2023, maybe a little bit less now. But that Palantir is actually, this analyst used some really colorful language, by the way, said that it sported a king's ransom of a valuation that was actually higher than any other stock in this analyst's software coverage. Now, he also noted that Palantir trades at a generous premium to the three fastest growing companies in the group. It trades at a 17.7 times the analyst's estimates for the calendar year 2025 sales. And so far, he's expecting to see sales jump about 23% in the calendar 2024 year. Now, if we look at its competitor, Snowflake, this analyst says that shares for Snowflake trade at about an 8.3 times multiple on the same metric, and he expects it to see about 34% sales growth this calendar year, a little bit more than Palantir. But this analyst believes that Palantir will still be able to capitalize off of AI spending that's been happening. However, since companies are watching their budgets, it's going to be subject to part of that purse string tightening, so to speak. Diane.
Yeah, and you know, Kenny, you noted that if the market pulls back, that is an opportunity on this name, right?
Yeah, I think so. And look, if the market pulls back, tech is going to pull back even harder. That's in that space. So you have to go in there kind of assuming if you're looking for a pullback that is going to happen, but that's going to provide a longer opportunity.
Analyst Brian White thinks Palantir stock is overvalued, but recently, independent research firm Argus Research gave Palantir stock a buy rating along with a $29 price target, implying an upside of 21.6% from current trading levels. The analyst behind the call, Joseph Bonner, points out that Palantir is on track to gain from the growing adoption of its AI software platform by commercial customers, which could help the company increase its earnings at an annual rate of 19% for the next 5 years. With this in mind, which analyst is right? And is Palantir stock a buy now? Palantir stock is considered expensive for a reason, especially when you consider the fact that its price-to-sales ratio was 18 at the end of last year. Additionally, the company's trailing price-to-earnings ratio is also quite rich at 208. Not only that, but Palantir's expensive multiple means it is prone to volatility. For example, the stock crashed last month after the company's Q1 earnings barely matched Wall Street's expectations, and its 2024 revenue guidance fell slightly short of consensus estimates. However, Argus Research points out that Palantir is a highly differentiated company and adds that its commercial business is going to be its next big catalyst. It's no surprise that Argus Research is optimistic about Palantir's commercial success, as market research firm IDC pointed out that Palantir was the top player in the global AI software platform market in terms of both revenue and market share. And to make this better, Gartner predicts that AI software spending could hit $298 billion in 2027, with government spending accounting for $70 billion after 3 years. Palantir's strong reputation as a provider of software platforms to federal agencies will come in handy to help it tap this market. After all, Palantir gets 53% of its revenue from selling its software platforms to government agencies. So there's still a lot of room for Palantir's government business to grow. But in addition to that, Palantir's management pointed out on its last earnings call that the total contract value in the commercial segment shot up an impressive 187% year-over-year to $505 million. What's also worth noting is that Palantir finished Q1 with a total remaining deal value worth $4.1 billion, up 22% from the previous year. This is indicative of the healthy revenue pipeline the company is sitting on. Even better, the strength in Palantir's deal activity is translating into solid growth in the company's commercial customer base. Its commercial customer count in the US jumped 69% year-over-year in Q1 to 262, while the overall commercial customer count increased 53% year-over-year to 427. The company is also witnessing stronger deal activity as it closed 87 deals worth $1 million or more in Q1 2024, up from 64 in the same period last year. All this clearly shows that commercial customers are warming up to Palantir's software offerings, and the company's government business is likely to gain more momentum as well thanks to recent developments. As a result, there is a solid chance that Palantir's growth in 2024 could be better than expectations, and the lucrative AI-related opportunity could help it deliver healthy growth in the long run. For these reasons, Palantir stock could be a great stock for investors who want to invest in a good growth stock, as its growing revenue pipeline could help it justify its valuation. But what do you think about Palantir stock? Is it a buy now? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Palantir is. If you would like to know what companies like Palantir have been up to these past few days, go ahead and click on the next video on your screen. See you there.